All right, so we take a look at, we got ES here and NQ here. Really coming into today, as you can see, we had pretty much we just about took this high and started to roll over. On NQ, there was a massive SMT. Here's that high, here's that high. But we're seeing weakness, and I'm very hesitant to go short, just given how bullish the market has been over the past month or two, or 2 months plus. But given this is the 10 a.m. candle close, we got 1 inversion, 2 inversion, there's also a 4-hour here. Same thing, we closed with a lot of intent. So really what I was looking for was price to push up into one of these inversions and then roll over and come down into, as you can see here, with this new week opening gap, and we left a large gap on open in regular trading hours. So let's take a look at today's trade. I'll just concentrate on ES, that's where I took the trade. So let's take a look at market open and where I took my trade. So as you can see here, we came down to the first zone I wanted to see hit, but there was no trade entry here. We're quite early into the session. So really what I wanted to see here, as I said, is a pushback. And let me mark out this 5-minute fair value gap. So I wanted to see how we responded to this first off. So I know, like, as I said, right now we're still in very bearish conditions, even with this strength. So I don't really have any interest in chasing this, given the macro structure, as I pointed out in the prior on the prior screen. So now I'm looking for weakness. For me, that's just not enough, because as you see, we're respecting this 5-minute fair value gap. But if I look over here at NQ, we're not respecting it. So again, just keep my eye on price to see where it wants to go. Still looks somewhat bullish. Now we came up, we took these resting highs, and I'm not convinced we're going higher. And this is the candle I took my trade. So my entry was here. My stop I put above just this candle wick, and my take profit was down. This is the new week opening price, which can often act as a support. So I wasn't even going to go for prior day's low. That was enough for me. So as you see, price was very choppy at these levels, and at this point, I put right here. I said, if we get down here, I'll see how structure develops, but I'm quite happy removing my stop. Not to. I have break even marked here, but I'm not break even. Just reducing my risk if we do get down to this level, because it's a prime reversal zone. So this is where I got a little bit more confident. When I saw us close with intent back through this gap, I thought, okay, this looks like we're ready to roll over. I waited for another candle or two. And right here, this is where I moved my stop. And why did I move my stop here? I don't know, it's hard to see here, but if you actually see there's a small D here, and that is the daily open. So my thought was, and by daily open, it means everything above here is going to be the wick of the daily candle. And it's reasonable to think the daily candle is going to want to push down into here and possibly see reversal, just given how bullish the macro conditions are. So to place my stop above daily open like this is smart, because I don't want to see the daily candle reverse and expand to the upside at this point. So this is a reasonable place for my stop to be. Essentially, I reduced my risk by 1/3, which is great. Now, where I made a mistake, I wouldn't say mistake. So, being that it was a short trade, I can look at my data over the past year, and given just how bullish market structure has been and conditions have been, my win rate on short trades is abysmal. So when I enter them, I'm far more willing to tighten up my risk, just given that there is that risk profile is on the table. But it's true. So that's one reason I tightened my risk up, and two is I actually did add a lot more capital. I'm copying just a lot more accounts as of really today. So I think that did play its part. So once we got this candle here, I now took my risk to break even. And this wasn't this. There's reason to think, okay, if we come back up here, it's probably going to reverse, but not really. Like what I did, where I made the mistake is if we actually look a little closer, we have equal highs here, and it's reasonable. The way price has been so choppy, you do have to give it more breathing room. And to come up here, take these highs and continue to roll over, that's totally reasonable. So realistically, and a rule I'm going to be bringing in going forward is, reducing risk is fine, but micromanaging is not. And this is, okay, you want to take my stop to break even, that's fine, but I'm totally fine risking 100, or risking whatever it is, like say $100 to make what this trade would have been, say 350. 100's fine. Taking this to break even here while we do have a zone of liquidity here, which we could easily wick, it's just unnecessary. So going forward, what I'm going to do is just a hard rule that, yeah, reducing risk is fine, but I'm only able to do it once. Otherwise, it turns into micromanaging. As we can see here, we'll take a look how it played out. There we get it. There's those equal highs being taken out. Immediately, once that liquidity is taken, we roll over. We come down. We literally wick my target zone, and then reverse from there. So like, okay, it's quite understandable why I did that, but just lesson learned. It's just like going forward, one adjustment. I know when I'm in shorts, it's okay being extra cautious because my data is stacked that way. Typically, if this was a long, I wouldn't have micromanaged like this, but it's just not a habit I really want to get into, babying trades, because most of the time I've got such confidence now in my read of the market. Like even my original stop, it's a very responsible stop. It has like, that's part of my system or model, is to use the wick extreme of a fair value gap. Once you see price go your way, that's fine. If you want to reduce it by half or go to break even, but just, I need to give up on the micromanaging, just let a trade breed, especially on a day where you see heavy wick action. It's you're just asking to get stopped out, and often just see price go into the direction you already thought, which is like disheartening. You know, it's just not great for your psychology to do things like that. But at the end of the day, I didn't lose any money. I'm still up on the week. I just this is an old habit I saw creep in today that I don't want to see reemerge.